the Amazon resurgence, how it's happened, and where the stock goes from here. Let's bring in CNBC's Kate Rooney, who covers the company, along with Amazon shareholder Stephanie Link of Hightower, also a CNBC contributor. It's good to have you both with us. Steph, I begin with you because you're the person I'm talking about who bought more stock today in this company. Tell me about it.
Yeah, I mean, I've been involved in this name for a while, Scott, as you know, but I was underweight relative to the benchmark, and I wanted to go overweight after I've done a ton of channel checks, which really shows that the momentum is continuing on top line, on margins, on bottom line. So if you step back, North America margins have now beaten for 5 consecutive quarters, and I think they're going to go from something like 4.2% last year to mid-single digits. That's the guidance. But when I look at the components of that, retail is seeing a lot of momentum, and retail margins are still well below pre-COVID levels. So I think that you can see that help the overall margin structure. And then, of course, you have advertising, which is growing at 24% year over year, and those margins are 42 to 43%. And as the economy remains strong, advertising certainly is a tailwind, at least the trends that they will see. AWS, they have about a 35% market share, growing upper teens. Only 10% of the workloads are on the cloud, so I think the momentum continues, and they've gotten their groove back for sure, because that really had been the issue that they were struggling with it for a couple of years. And then finally, Scott, the logistics business is seeing amazing efficiencies. So they went to this regionalized strategy, and now they're seeing 45 cents per unit cost reduction as a result of this strategy. And of course, we know last year they delivered $5.9 billion deliveries, packages, and they now have a 27% market share. They're actually growing, and they have a higher market share than FedEx and UPS. They're getting close to the U.S. Postal Office as well. So I like all this stuff. I look at the valuation. One last thing. It's trading at, not cheap, but 13.9 times EBITDA. The last 5 years, it's traded at 17.8 times EBITDA. So I wanted to make it bigger.
So, Kate Rooney, Stephanie mentions the company getting its groove back. Let's put up the 3-year chart again, because it shows a company that lost its groove, at least from a stock performance standpoint. My question to you is, how have they done it? How have they gotten this groove back? And look, you can call this run in the stock stealth if you want. Maybe the last leg of it has been stealthy just because, NVIDIA sucked all the oxygen out of the room for everybody else. Right. But look at that move then. That's a 3-year chart we're showing you. You lose something and then you gain it back. And how has this happened?
I would say the takeaway, the headline, it's Andy Jassy and its efficiency. So he took over for Bezos, obviously the founder of Amazon, the face of Amazon, at a moment when it really was still taking these moonshot bets, trying to really do everything and do it well. And Andy Jassy stepped in, brought more efficiency, brought more discipline. That's something we saw across tech with layoffs. But they did a lot of investing in that sort of dip period you see there. They spent a lot on what Stephanie was talking about, regionalization, getting more efficient, making delivery faster, which was an investment cycle. They're now reaping the benefits. They're on the other side of that, and we're seeing it pay off in North American margins. E-commerce is becoming such a bigger deal for the sell side. We've talked so much about AWS and AI this year, which is still sort of an open question for Amazon. I think they're seen as a laggard behind the other hyperscalers. But when you look under the hood at e-commerce and the margin structure there, that's really what the sell side has gotten excited about. JP Morgan last week writing about how they're going to be bigger than Walmart this year. Bank of America talking about shipping and logistics really being part of the upside. So it's one of these mega cap tech companies that also gets you exposure to consumer discretionary. So a little bit of a hedge there. And I think the chart really does say it all there, Scott.